While being slightly fast-paced, as of 11:02 a.m. Eastern Time, Faraday Future Intelligent Electric Inc., trading under the ticker FFIE, is currently priced at $1.67, experiencing a significant intraday drop of 3.75%. The stock is navigating a volatile session, having traded between a high of $1.73 and a low of $1.62 on a volume of over 4.1 million shares. While many watching this stock see a beleaguered EV startup struggling for survival, the reality of the current situation is far more complex and hinges on a dramatic, high-stakes pivot that most of the market has yet to fully comprehend. The expectation is that Faraday Future is just another name in the crowded graveyard of electric vehicle hopefuls, burning cash with little to show for it. But the reality is that the company is attempting a radical transformation, not just as a car manufacturer, but as a dual-pronged tech entity, venturing deep into the world of Web3 and cryptocurrency. This isn't just about building cars anymore. It's about building a digital ecosystem, a move so audacious that it will either be the masterstroke that saves it or the final fatal overreach. The common belief, echoed in trading forums and casual analysis seen on platforms like Robinhood and SoFi Invest, is that Faraday Future's fate is tied exclusively to its ability to ramp up production of its ultra-luxury FF91 vehicle. The narrative is simple: deliver cars, generate revenue, and survive. This is the lens through which most investors, especially those engaged in self-investing, view the Tesla stock playbook and apply it universally. However, this perspective is dangerously incomplete. The deeper reality is that FFIE's management appears to be hedging against the brutal economics of automotive manufacturing. They've seen the struggles of peers and seem to believe that the car itself, the ultimate AI tech luxury FF91, is becoming a physical gateway to a digital, blockchain-based ecosystem. This isn't just about building cars anymore. It's about building a digital ecosystem, a move so audacious that it will either be the masterstroke that saves it or the final fatal overreach. The common belief, echoed in trading forums and casual analysis seen on platforms like Robinhood and SoFi Invest, is that Faraday Future's fate is tied exclusively to its ability to ramp up production of its ultra-luxury FF91 vehicle. The narrative is simple: deliver cars, generate revenue, and survive. This is the lens through which most investors, especially those engaged in self-investing, view the Tesla stock playbook and apply it universally. However, this perspective is dangerously incomplete. The deeper reality is that FFIE's management appears to be hedging against the brutal economics of automotive manufacturing. They've seen the struggles of peers and seem to believe that the car itself, the ultimate AI tech luxury FF91, is becoming a physical gateway to a digital, blockchain-based ecosystem. The recent announcement of their plan to spin off their crypto business into a second, independently listed company named CX10 is the single most important development for this stock. It's a strategic cleaving of the business designed to unlock value, attract a different class of investor, and isolate the capital-intensive auto operations from a potentially high-growth, asset-light digital venture. This isn't just a side project, it's a parallel lifeboat. The recent market activity reflects this profound strategic uncertainty. The stock's daily swings are not merely reactions to production updates, of which there are few and far between. The reported delivery numbers are, to be blunt, abysmal, a total of just 16 cars delivered since production began in 2023. For a company with a market capitalization hovering around $245 million, such figures would normally signal imminent collapse. The stock has been on a gut-wrenching ride, with a 52-week range stretching from a low of 0.83 to a high of 4.46, illustrating the immense volatility and speculative fervor that defines it. This isn't a stock for a passively managed Schwab Intelligent Portfolios account. It's a high-risk battlefield for active traders using platforms like interactive brokers that can handle rapid price changes. The recent financial results from Q2 2025 paint a picture of a company walking a tightrope. An adjusted operating loss of $27.4 million and an operating cash outflow of $43.6 million for the first half of the year are stark reminders of the immense cash burn. Yet, paradoxically, the company reported its quarter-end cash position reached an 18-month high, a testament to its ability to continue securing financing, bringing in $55.1 million during that same period. This is the core tension. The operational reality is bleak, but the financial maneuvering has been surprisingly resilient. Delving deeper into institutional activity provides another layer of complexity. Recent filings show a significant increase in ownership from major players. Both BlackRock and Vanguard reportedly increased their holdings by over 500% by the end of the second quarter. While the overall institutional ownership remains low at around 13 to 16%, such aggressive accumulation by the world's largest asset managers cannot be ignored. These are not flighty retail investors. Their moves suggest a calculated bet on a future event or a valuation disconnect. It could be that they see the crypto spinoff as a deeply undervalued asset, or perhaps they believe the company's Middle East expansion and new, more affordable FX vehicle hold more promise than the market is pricing in. For those managing their own individual brokerage accounts through services like Fidelity, understanding these institutional undercurrents is critical. It's a sign that while the surface narrative is one of failure, sophisticated money is making a contrary bet. Let's briefly touch on what the company actually does, for those unfamiliar with its saga. Faraday Future was founded with the ambition to create a new species of electric vehicle, one that was as much a high-performance computer on wheels as it was a mode of transportation. Its flagship, the FF91 2.0 Futurist Alliance, comes with a staggering price tag of $309,000, placing it in a rarefied atmosphere. It boasts 1,050 horsepower, a 0 to 60 miles per hour time of 2.27 seconds, and an AI-powered operating system. The company's history is a turbulent one, marked by funding crises, leadership changes, and repeated production delays that have severely tested investor patience. This history forms the backdrop of the market's expectation of failure. The company has consistently overpromised and underdelivered on the manufacturing front, a sin for which the market is notoriously unforgiving, punishing it far more harshly than it has established players like Apple stock or Nvidia stock for their respective stumbles. So, where does this leave the future outlook? It's a landscape of binary outcomes. The primary catalyst is the successful execution of the crypto spinoff, CX10. If the company can successfully create and list this new entity, it could unlock immediate value for FFIE shareholders and provide a non-dilutive funding mechanism. The company has already allocated $10 million in crypto assets to its C10 treasury and claims positive performance. This is the ultimate reality exceeding expectation. Furthermore, any tangible progress on its more mass-market FX vehicle program, which is targeted to begin assembly by the end of 2025, could significantly alter the revenue outlook. The company has also regained full compliance with Nasdaq's listing requirements, removing a significant overhang of risk. Comment below. Do you believe separating the crypto business is a genius move or a desperate distraction? However, the risks remain monumental. The foremost is the relentless cash burn. The company's survival is contingent on its ability to continue raising capital in a market that is increasingly skeptical of pre-revenue EV startups. Any hiccup in financing could be fatal. The second major risk is execution. Faraday Future has yet to prove it can mass-produce anything. Its track record is a liability, and until it can demonstrate a consistent and meaningful production ramp-up, the market will remain deeply skeptical. Competition is also fierce, not just from Tesla, but from Lucid and a host of other global luxury brands entering the EV space. Faraday's technological edge, if it ever truly existed, is shrinking by the day. The analyst consensus reflects this uncertainty, with a general hold rating and a wide dispersion of price targets that underscores a lack of conviction in either direction. Investors using Fidelity ETFs or Fidelity mutual funds for broad market exposure will find little comfort here. This is a stock that defies index-hugging strategies. In summary, the story of Faraday Future Intelligent Electric is a captivating clash between a grim operational reality and an audacious, perhaps brilliant strategic pivot. The market's expectation is rooted in its past failures as a car company. The emerging reality is that it may be transforming into something else entirely, a hybrid entity leveraging a luxury EV brand to launch a Web3 ecosystem. The intraday price action, with its sharp drops and high volume, is the market struggling to price this radical uncertainty. The increased institutional ownership suggests some believe the potential reward outweighs the staggering risk, a view not commonly shared among users of more straightforward investing sites or those seeking basic